You can be the one sitting on a beach, getting a tan and making a living all at the same time. Investing into companies that give out dividends can help give you that financial freedom your heart and full pockets desire. This is one of the easiest passive income methods to start and honestly can be the most powerful, which is why today I wanted to go over how you can change your life with dividends and definitely not show you some companies that could be the key to growing your portfolio, because I'm not a financial advisor and this is not financial advice. The stock market contains risk and you should do your own research before investing into any company. Now, when we're talking about financial freedom, it's important to know that it's going to take a while before you can be solely dependent on, say, dividend stocks for income, which is why I recommend starting as soon as you can and pairing this up with some other passive income methods. You should definitely check out my other video. It goes over 7 passive income ideas. It's a great start and just gives you some general ideas on different things you can do to start gaining some passive income and help guide you towards self-sufficiency. Now let's talk about the power of dividends. If you bought 10 shares of Coca-Cola today, reinvested your dividends, and bought 10 shares every year for the next 25 years, you would make over $350,000 after only investing less than $20,000. Now, what exactly is a dividend stock? It's a company that pays out a percentage of their earnings with their shareholders. This is in the form of dividends, which is usually paid out quarterly. You gain more dividend income per the amount of shares you own, so the more you invest, the more you make. The powerful part of dividends comes with reinvesting. Many brokerages give you the opportunity to immediately reinvest your dividends back into the company, which can create a compounding effect. This is where the real money comes from. Now, when looking for dividend-paying companies to invest in, it's important to make sure you are understanding the company before buying in. When I first started, I definitely invested in some companies because they had such a high dividend rate, but they had been losing money for the past 5 years, and I didn't do a full enough analysis to realize the mistake until it was too late. A company can't pay dividends if they go out of business or if they're struggling. You're not going to be eaten if the company's not eaten. Now it's time to not be a financial advisor and definitely not go over the 5 highest paying quality dividend stocks that will be a great start to help you on your financial freedom journey. Make sure to stay till the end because the last one is definitely not the most highest paying and most consistent of all time. Also, at the end of the video, I'm going to break down all the stock and how much money you could be making with them over a long period of time. First company is Chevron. They are one of the largest integrated energy companies. They've been a staple in many dividend investor portfolios for years, and there's a good reason. They were founded in 1879 and involved in every facet of the energy industry. They explore for produce and transport crude oil and natural gas, refine, market, and distribute transportation fuels and lubricants, manufacture and sell petrochemicals and additives, and develop and deploy technologies that enhance business value in every aspect of the company's operations. They got a pretty impressive dividend history. 37 years of increasing their dividend percentage, one of the finest of the aristocrats. Chevron has maintained a strong balance sheet even during challenging times for the energy sector. Their diversified operations across upstream and downstream segments help stabilize their cash flow. While the world is gradually shifting towards renewable energy, oil and gas are expected to remain significant parts of the global energy mix for decades to come. Chevron is also investing in renewable energy and carbon capture technologies, positioning itself for the energy transition. Now, the main risk for Chevron includes oil price volatility, increasing regulations on fossil fuels, and kind of the long-term shift towards renewable energy. However, their strong financial position and gradual pivot towards cleaner energy sources really help mitigate these risks. The second company is Amcor. They are a global leader in developing and producing responsible packaging for food, beverages, pharmaceuticals, medical, home and personal care, and many other products. They're founded in Australia in 1860 and grown into a huge global packaging powerhouse. They operate in over 40 countries and are at the forefront of developing packaging solutions that are increasingly sustainable and recyclable. While they don't have the multi-decade dividend growth streak that some other companies have, they have consistently paid dividends and have shown a commitment to growing their payout over time. Amcor is definitely one I hadn't heard of before, but sitting at only $11 per share with a 4.5% dividend percentage yield, they would be a great start to any dividend portfolio. They demonstrated stable financial performance, benefiting from the essential nature of packaging in various industries. Their global scale and focus on innovation provide them with the competitive advantages in the packing industry. The demand for packaging is expected to continue growing, driven by e-commerce, healthcare needs, and consumer goods. Amcor's focus on developing more sustainable packaging solutions positions them well for the future, as environmental concerns become increasingly important to consumer and regulators. Now, some of the key risks for Amcor include potential regulations on plastic packaging, fluctuation in raw materials, and economic downturns that could affect consumer spending and packaging demands. Third company is TROW Price Group. Probably haven't heard of them, but they're a global investment management organization that provides an array of mutual funds, sub-advisory services, and separate account management for individual and institutional investors, retirement plans, and financial intermediaries. They're a financial institution that has been consistently increasing their dividends for the past 38 years. They're at about $110 per share with a 4.5% dividend yield. They were founded in 1937 and have built a strong reputation in the investment management industry. They're known for their disciplined, risk awareness investment approach and commitment to proprietary research. The company has maintained a strong balance sheet with little to no debt, which is impressive in the financial sector. Their profitability is tied to assets under management, which can fluctuate with market conditions, but has shown long-term growth. The growing needs for retirement planning and professional investment management in many parts of the world provide a positive long-term outlook for TROW Price. Their expansion into new markets and investment strategies, including like the environmental, social, and governance focused funds, position them for future growth. The main risks is really market volatility affecting assets under management, increasing competition from passive investment products, and potential regulatory changes. The fourth company is Realty Income Corporation. You might have heard of them before. They're kind of referred to as the monthly dividend company. They're a real estate investment trust that invest in freestanding single-tenant commercial properties. They've got a shocking dividend yield at 5.2% and have been steadily improving in the past 27 years. Founded in 1969, Realty Income has become one of the most well-known REITs in the market. They primarily acquire and manage retail properties leased to major companies under long-term net lease agreements. The company has maintained a strong balance sheet and has shown resilience even during economic downturns. Their diverse portfolio of properties and tenants, along with long-term lease agreements, provide stability to their income stream. While e-commerce has put pressure on some areas of retail, Realty Income's focus on service-oriented and non-discretionary retail has helped insulate them from these trends. Their expansion into industrial properties and international markets provide avenues for future growth. Some of the key risks include potential changes in the retail landscape, interest rate fluctuations, and economic downturn that could impact their tenants' ability to pay rent. Now, our final company and number one dividend stock is Franklin Resources, Inc., also known as Franklin Templeton, a global investment management organization. Now, the numbers alone show why Franklin is considered the best. They've been increasing their dividends over the past 44 years, bringing them to a cool 5.9% currently, with only a $20.95 share price. Founded in 1947, Franklin Resources has grown into one of the world's largest asset managers. They offer investment management and related services to retail, institutional, and high net worth clients across the globe. The company has maintained a strong balance sheet with low debt levels. Profitability is tied to assets under management, which can fluctuate with market conditions, but has shown long-term growth. The global trend towards increasing savings and retirement planning provides a positive long-term outlook for asset managers like Franklin Resources. The recent acquisition of Legg Mason has expanded their capabilities and scale, potentially positioning them for future growth. Some key risks for Franklin Resources are the market volatility, just like with anyone, increasing competition, and some regulatory changes. Remember, while these companies have shown commitment to paying dividends, it's crucial to look beyond just the dividend yield. You got to consider different things like the company's overall financial health, growth prospects, and how it fits into your investment strategy. Diversification is key in any portfolio. Don't put everything in one company. Consider your risk tolerance, investment goals, and time horizon when making investment decisions. Also keep in mind that dividend policies can change. Even companies with long histories of dividend payments can cut or suspend their dividends if their financial situation deteriorates. Now for the most fun part. How much money you will make on each one of these stocks. Now, if we initially invest about $1,000 into each of these, and we continue to put in $1,000 every year, after 40 years, you would have profited over $3.7 million, only after putting in a little over $5,000 a year. The exponential growth of dividend investing is absolutely insane. So my biggest piece of advice is to start as soon as possible, but please be smart with your investments. Now, as always, let me know if you liked the video below, and if you learned at least one thing about a company that pays out dividends, please subscribe. I got more videos like this, more passive income videos, a ton coming out. So thanks so much for watching. I'll see you later.